Welcome to this brief overview of one of our current thematic investing ideas, U.S. real estate, via real estate investment trusts, better known as REITs. This video is brought to you by Thematify, where we believe that thematic investing can be for everyone and anyone. REITs provide a liquid, traded indirect access to the real estate sector. They are required to distribute 90% of earnings, and are therefore favored by income seekers. While capital appreciation may be limited, overall the total return over longer periods has typically been similar to or higher than global equities. The U.S. tends to dominate global REITs indices with a 60 to 70% share, and is the focus for this theme as the most supportive interest rate backdrop is also in the U.S. Key trends that support the investment case for this theme are: 1. Interest rates. U.S. interest rates are widely expected to have peaked, creating a supportive future backdrop for a yield-based asset. However, we caveat that reduction in rates may still be some way off, hence this theme requires patience. 2. Sector allocation changes. The sector has modernized itself over time, which may not be fully appreciated by the market. This chart shows the allocations in 2010. More recently, new sectors such as data centers, healthcare, storage, cell towers, and the like have moved closer to half the average allocation of REITs. This is indicated by the recent makeup of the Nareit U.S. Real Estate Index, which is shown in this chart. The doom and gloom of office spaces has had a negative sentiment impact, whereas its actual allocation in a REIT index or ETF is typically under 10%. 3. Recent performance versus equities. Due largely to high rates, the sector has underperformed equities recently, for example returning only around 12% during 2023 compared to the S&P 500 return of approximately 24%. 4. Discount versus NAV. Although this is common in REITs and quoted funds such as investment trusts, pricing at a discount to NAV provides downside support. 5. Bad news mostly in the rear-view mirror. With the negative impact of COVID, high rates, low office occupancy etc. gradually dissipating, the outlook is more optimistic. As you can see from this chart of an illustrative ETF, the sector has suffered since 2022. In terms of how to access this sector, there are numerous ETFs and funds available to access this market. An illustrative ETF list is shown here. However, even within the U.S. focus of this theme, it is better to focus on key sub-sectors and consider a screenshot list of potential beneficiaries of the theme. At Thematify.com we review thematic opportunities through our proprietary process and Thematify screen. Please visit us at Thematify.com to review thematic ideas and ideas under consideration. Also look out for our subscriber offer, coming soon. Finally, please make sure to do your own research and only invest within your risk appetite. Thematify is only for education and insight and in no way to be seen as a recommendation of any kind.